Your stop loss is not risk management. Your stop loss is not risk. Why is it hard for people to understand this thing? The market does not care. The market does not give a flying, flipping about your stop loss. Don't know who needs to hear this, but I'm saying this unapologetically. Look at my face. Your stop loss is not risk management. Just because you set your stop loss does not mean you have managed your risk properly. Okay? Hi guys, welcome to another video, and it's yours truly, Alpha Miracle, and we are going to be talking about risk management today. Mastering the art of risk management, staying in for the long term. Okay? Yes, I said what I said. Just because you set your stop loss does not mean you are managing your risk properly. I'm serious. The market doesn't care. The market will do what it wants to do. And just because you now said, oh, it should not pass this so, yes, it is part of risk management. But risk management is not limited to just setting your stop loss and going to sleep. It's the whole thing. It's the whole package. Risk management is everything in forex trading. It's not your strategy, it's not your psychology, it's not anything. No, risk management. Because if you set your risk management right, mind you, risk management, not stop loss. If you master the art of risk management in trading, trust me, you're booted for life. I'm serious. And why is that? It's because risk management matters over the long run. Yes, we want to make money, but that is not the primary goal. The primary goal when it comes to forex trading is to protect your capital. Protect your capital. That's the goal. Once you lose your capital, it's game over and you have to start over. So yes, you want to make money, but it's not really much about making money. Making money is actually secondary. The primary goal when it comes to forex trading, when it comes to this game of forex trading, it is protect your capital. And risk management will help you do that. It will help you stay in the game for the long haul. Now, let's come to the actual setting of stop loss. Yes, you are setting your stop loss and saying, okay, on this particular trade, I don't want it to be more than this amount of loss. Yes, and that's fine. Risk management goes beyond that. Okay, it's more than just setting a defined maximum loss, saying okay, it shouldn't go more than this amount of pips below, or in loss. It's about preventing emotional decisions. It deals a lot with position sizing. How much am I willing to trade? How much am I exposing? It's not just about, okay, I'm risking 1% per trade. If you're risking 1% per trade, but you're taking too many trades of 1%, that account is exposed. So your risk management is already out the window. So yes, you are following your risk management rules by not risking more than 1% per trade. But just for example, you have a $10K account and you risk 1% on Euro USD. Euro USD is still open. You're risking another 1% on GBP JPY. GBP JPY and Euro USD are still open. You're risking another 1% on XAU USD. Now you already have 3% exposed, and you're still looking at taking another trade on GBP USD. That's already 4% exposed. What happens if all four of them are losses? And just like that, in a matter of seconds or probably hours, if you're a day trader or a scalper, you've lost 4%. And you will now be looking for opportunities to get back into the market. Now, if that is your personal account, you can say, okay, that's fine. But if that is a prop firm, you've already lost the account. Chances are you've already lost that account. So you see what I'm talking about? It's not just about setting your stop loss. It's about overexposure on your account. You don't want to expose your account too much. Risk management also talks about diversifying your portfolio. Now, I got to understand this one the hard way. There was a time I thought diversifying my portfolio just meant trading different assets. Yes, it's good to trade different assets, but if you would take it a step higher, a better way to diversify your portfolio in the forex market would be to have multiple accounts designated for different assets. There are multiple ways you can do this. You can have maybe 3 or 4 accounts. Maybe the first account is just for currency pairs, the second account is just for commodities, another account is just for indices, Okay, that way you understand that I have actually diversified my portfolio. And if you're also going to be following the rule I mentioned about not overexposing your account, do you get it's you see that the whole risk management is now a lot more than just setting your stop loss. You can go even further, you can go a bit more extreme and just have one account to one pair. So this $10K account, the only thing I'm using or I'm going to be risking on this particular account is going to be Euro USD. And my second account, the only thing I'm going to be trading here is XAU USD. Next account, that is going to help you to not expose your account too much. Okay, so you have one account to one pair, and you know that on each pair or on each trade that you're taking, you're not risking more than maybe 1% or 2%. So you see that account is already properly secured. You're managing your risk properly. Now you can diversify your portfolio all you want, but if you are trading a negative RR, then I don't know, something is wrong with you. Because it doesn't make sense to me. How do you tell me to risk 1% of my account to make 0.25%? Why? In what world is that a highly profitable trade? Like, look, risk to reward matters, okay? Your risk to reward is also part of your risk management. Why? Because you can't win every trade, okay? So your risk to rewards, the higher it is, usually the better for you. It can help you balance out those losses, okay? So you lose a trade, it's fine, but you know that based on your strategy, based on your edge, and based on win rates and all your data, your statistics and everything, you can still come out on top. So your risk to reward is also part of your risk management. All right. One more thing I wanted to talk about. I want to talk about trailing your stop loss, using protective orders. All right. Trailing your stop loss. Close the gap. When you see market structure shift, close the gap. Reduce your risk at each point in time. It's not just about the stop loss. It's also about the take profit. Some people don't know how or when to take a profit. Man. So you see why when I tell some people your stop loss is really just not sometimes you want to do a risk to reward of 1 to 3, but you realize that price has gone from your entry and it has done a 1 to 2.5 and it's just dancing around 2.5, 2.8, goes down to 2. It did not come to your mind that you should, number one, move your stop loss. Then it still keeps playing around maybe 2.8. For God's sake, your take profit is 1 to 3. Close the trade. Close the trade. Know when to take your profit. Okay, that's also part of the risk management. Another part of risk management: avoid revenge trading. Avoid it. If you see revenge trading coming like this, cross to the other side, jump over the bridge, enter the river, swim, like run. Avoid revenge trading. If you lose more than the amount, look, you should have a specific amount of losses that you can take per day or per time on a particular pair. You're trading on one particular day, maybe Euro USD. The first trade did not go well, the second trade did not go well, the third trade did not go well, and you're trading the London session and the time is just 11 o'clock. And I'm wondering, like, how have you lost 3 trades and it's not even known yet? And the London New York intersect comes up and you still want to take another trade. Next one that you really want to look at when it comes to risk management is your risk tolerance. I call it your risk appetite. How much can you eat and swallow with ease? How much can you actually bite and swallow? Some of you take trades that will give you high blood pressure. Some of you take trades that will make you unable to sleep peacefully. You don't want to do that. If you take a trade and you cannot go to bed and sleep well and not dream about Forex, then you've actually over leveraged or overexposed your account. You've beaten more than you can chew. So reduce that risk. Understand your risk tolerance. Know what your risk appetite is. Assess your risk tolerance before you enter that trade. Align your strategy with your risk comfort zone. Let's say normally you risk 1% of your account on any given trade. Your mind would be at ease. Your mind would be at rest, generally speaking. If instead of taking 1%, you actually took 0.5, then you came back and you saw that, okay, this thing is actually in a loss right now, you would be fine. Chances are you look at it like, okay, chicken change. So I'm just going to tell you for free, that risk that you have right now, that you think that I'm fine with it, go and reanalyze it. You may want to cut that thing by half. bad emotions can lead to poor decisions. So you have to also learn to be in the right headspace. Learn to be in the right headspace. It's not just about rushing into the market and taking a trade, setting your stop loss. Okay, even if you set your stop loss, you don't overexpose your account, you don't overtrade, you're not revenge trading. If your head is not in the right place, if you're not calm while making that analysis, you will make a mistake and your risk management. Remember, risk management is not just about that 1%. The risk management is about protecting your capital, protecting the whole asset, So you need to be at your prime. You need to be at your best when, trading. Have the right mindset. If you know that you have to drink coffee in the morning for your head to work fine, go and drink coffee. If you know you have to do boxing training in the morning before you trade, go and do your boxing training. If you know you have to go for a run before you sit in front of that screen. Whatever you do, just make sure that by the time you're sitting at the front of that desk, by the time you're sitting in front of your screen, make sure that you are a prime trader. Gaskia. Simple. That's all. Manage your risk properly and you will be fine. If you found value in this video, hit the subscribe button, turn on the notification, and give this video a like. It helps me, helps you, helps everybody. Catch you guys in the next one.